Happy Sunday, everyone. Welcome to this week's Weekly Outlook. We did have an interesting close this last Friday. Equity indexes ended the day red, predominantly led by Broadcom headlines. The dollar index sitting right at the 50% retracement level. The long end of the yield curve traded higher post FOMC, and the yen 10-year yield remains to trade elevated just as we're heading into a Bank of Japan rate decision. Starting off with equities here, we did see that the Nasdaq took a bit of a hit as well as the S&P 500, but the Nasdaq was the real loser here. Broadly led by Broadcom, the company. They had some headlines there that went ahead and tumbled it lower. We have this line of defense at the 25,000 level. I'm curious to see what happens there. If we do break below, then perhaps we can have another test for the bulls down here at this 25,000 level. I think that's a pretty solid level to go ahead and give that chance to the bulls. I think pulling back down from there, about 6% drop here, almost 7. Still think that given in this market, that is a pretty healthy drop there. So I'd be, if I were trading the Nasdaq actively, I would look at this 24,000 level as a solid entry point. Same thing with the S&P 500. That 6,500 level is going to be acting as a level similar to the Nasdaq, that 24,000 level. The dollar index is sitting at that 50% retracement level. We do have a chance that we can go ahead and break down lower here. Also, we did have a headline coming into the Friday close. President Trump went ahead and said that he's leaning towards Walsh or Hassett, both Kevin, so Kevin Walsh or Kevin Hassett. Walsh, known to be a hawkish member, but he has recently turned more on the dovish camp here. Perhaps that can shake up that super dovish narrative that we have pricing into the dollar. So I'm curious to see how that market is going to open next week. We go ahead and see if the dollar index chugs lower to that 61.8% retracement level or it bounces off at that 50%. Looking at yields here, the long end of the curve is trading higher, so past that pre-FOMC dovish tone that we received on Wednesday. This was the day here we had a little bit of a chug lower, and we have now fully retraced that move. Going into the 10-year yield approaching that same level as well. We did have a more aggressive sell-off on the US 10-year yield, but then we did go ahead and rebound with this bullish hammer candle, and now we are trading back at those levels as well. So going into the next week, I'm very curious to see how that plays out for markets. Perhaps if yields continue higher, then the dollar index will find some kind of a rebound at this 50 handle. Japanese 10-year yields continue to trade elevated here at these highs, just shy of that 2% going into next week, where the Bank of Japan is looking to hike their rates. They're going to go from 0.50 to 0.75, so we'll see how that plays out. Now, the Bank of Japan has indicated that they're going to be cautious in their rate hikes just because they do know that the yen has been used as an arbitrage opportunity, and aggressive rate hikes can go ahead and unwind and trickle into the financial markets and cause a little bit of a ruckus. So they did go ahead and voice that they're going to proceed with caution, but we'll go ahead and see the forward guidance after the rate statement next week. Going into currencies and possible opportunities here. So when we did get that dovish Fed commentary, we did have a bit of a retracement here in the Aussie dollar, or we did have a pickup in the Aussie dollar. I did take a trade and that ended out flat, so it didn't really work out. It was a very quick intraday type situation. If we continue to pull back though, as we do look like we are doing, perhaps I can pick up some Aussie dollar at a discount level here, the 6,200 or 66,200 level. I missed the opportunity almost twice here because we did retrace closer to this level, but we'll go ahead and see what happens if price goes ahead and reaches this level. Perhaps we get to this level and the fundamentals shift with the CPI and NFP that's coming out next week, and then we continue to actually drop lower. So that's one thing that I'm going to consider. I have to proceed with caution and use discretion on that, but I'll go ahead and make sure to keep you guys updated on that front. Euro dollar did go ahead and poke here. We're staying relatively strong here. So Aussie dollar, New Zealand dollar took a little bit of a hit. The euro dollar was showing some relative strength, so we're still at this level of resistance. When it comes to the euro dollar though, I do want to proceed with caution. As I did mention, we do have that news coming up next week. Perhaps I'll wait for a more deeper pullback at this 16700 level, something like that. So we'll go ahead and wait on the euro dollar. Similar to the Aussie dollar, whenever that we did get that dovish Fed commentary, I did take a stab at it, and that one actually did close for a small profit here of like 0.6%. So that was really good trade. Dollar yen, I did take a short position on that dovish Fed commentary correlated with the Aussie dollar and euro dollar. That one did not work out, so that was a loss in the trade. So we're net negative there, just for full transparency. I don't plan on trading the dollar yen anymore just because we're heading into that Bank of Japan decision. I prefer to wait after the fact and get more clarity on the decision and rate projections for the Japan. Pound dollar, we did go ahead and poach up above this level of resistance. Now it looks like a potential level of support, though I'm curious to see what happens, as next week we do have employment and inflation data for Bank of England. The UK is in a tricky spot. They do have high inflation inflation and contracting growth, which is a stagflation environment. So not a easy situation to navigate by any means. So I'm curious to see how that unfolds. If we continue to see some worsening data out of the UK, we can probably see this level not hold as great, and we do see some kind of a retracement in the pound dollar. Now, given that currencies trade in pairs, perhaps that depreciation can trickle into the dollar getting a little bit of a lift. So I'm going to proceed with some caution next week. Next week's going to be a really big deal. New Zealand dollar not being too reactive here to this level of resistance. I'm going to stay away from the trade if I just go down to the weekly time frame. We're kind of trading flat in here. I would like to see some more confidence in the move, perhaps a clear break below or a clear break above if I do want to participate in the New Zealand dollar. Dollar Swiss, one of my contrarian plays. I did voice earlier in my videos that I did want to pick some dollar Swiss because long term I do think that the outlook for the dollar is bullish relative to other currencies. So we did go ahead and trade lower here. So I did pick a position up right here, collecting some income. I want to see how it plays out. Perhaps going into the next week, if the dollar does get some footing, then this trade can continue to play out. But ultimately, I'm open to picking it up at the 7,900 level. Now, if we do get a good flush below, then I'll go ahead and use that as a hard stop and just get myself out of the trade. Whenever the dollar Swiss does go ahead and break important levels, it does continue to do so with full force. That's just one of the things with the dollar Swiss, that it does really respect those levels. So you can see here in the past, it has really held up. If I go down to the weekly time frame, it has held up here, and when it did flush below, it did flush and continued. We flushed this level here, retraced, and continued even lower. So I have to proceed with caution with the dollar Swiss. That's going to be that level where if I go below, I'm just going to call it quits there. But I am going to collect some positions and hopefully get some income with a longer term campaign targeting these higher levels, perhaps this level of resistance or beyond that if we do get a clean break above. Dollar CAD here continue to trade a little bit lower here. This level of support would be interesting to myself. I am looking to see if we get into this deeper level, this 3,600 level with the dollar CAD. Perhaps I'm going to pick that up there. So I'm going to look at the dollar CAD with a close eye. I'll go over Bitcoin here lastly. Just poked shy below 90,000. We're kind of struggling here. We're chopping around Bitcoin in this level. I'm curious to see if we do ultimately get down to this 70,000 level that I've been talking about for some time here. Perhaps when Bank of Japan does go ahead and hike rates, we can see what Bitcoin does to react on that, and we can actually kind of get a gauge as to how sensitive Bitcoin is to the Japanese yen. A lot of people tend to arbitrage and they go ahead and borrow in that cheap yen and park it into higher yielding assets like Bitcoin. And when you do raise rates in Japan, that interest rate divergence does go ahead and narrow a bit, causing that arbitrage opportunity to be less lucrative, less attractive. And so if we do get a Bank of Japan that does hike rates and the forward guidance does show that they want to continue doing so, perhaps we can see a little bit more unwinding and we can get a gauge as to how sensitive Bitcoin is to cheap borrowing. And that's it for this week's weekly outlook. I'll go ahead and see if I can get an opportunity on the Aussie dollar. However, I will proceed with caution and discretion once we get down to this level to see if that dollar really does catch a footing there, and then perhaps I'll go ahead and stay away from that one. Euro dollar looking pretty relatively strong here, so I'm going to see what happens at this level. Pound dollar, I do anticipate that perhaps if we do get some weakening data here for labor and a hotter print in CPI, I'm curious to see what happens with the pound dollar. I think upside is somewhat capped here for the pound, so I'll go ahead and monitor that. New Zealand dollar, not liking how it's stalling at this level of resistance. I'm going to stay out of that one. Dollar yen, not looking to trade it by any means. After the Bank of Japan decision, if we do get a pause in rate hikes, then perhaps this thing can continue to chug higher, but then we do have that risk of intervention territory. So going to proceed with caution after the fact. If we do get a very hawkish Bank of Japan, then perhaps we can see dollar yen to get a full-on retracement, and perhaps we do reverse course, at least temporarily, trading back down to this bottom level of the range at the 140 handle. Dollar Swiss picked up a position here at relatively discounted levels, looking to pick up some more at the 0.7900. If we chug higher from here, great. I'm willing to collect some income. If not, if we chug below this 78,500 level and continue to flush lower with some conviction, then that'll be a hard stop for me, and I'll go ahead and ditch the idea. Dollar CAD, not too convinced with the price action here. I'm going to continue watching the developments in the Canadian economy. They are doing pretty good actually. So if we do see that their data continues to progress and the dovishness of the Fed, then perhaps it'll be an opportunity to participate short or just be patient for some more discounted prices, ultimately going long dollar CAD. And that's it for this week's weekly outlook. Thank you guys so much for watching. I truly appreciate it. Leave any comments, questions down below. Have a blessed rest of your day, and like always, trade safely. Bye bye.